Okay, well, it looks like we've got about uh 10 o'clock here according to my clock. So let's go ahead and get started as I do want to respect your time and hopefully you will come out with a lot of good information and tips and tricks on how to bind more with Blitz. My name is Ryan Parris. I'm a business production underwriter here at Blitz. I have been in the industry, the insurance industry, since 2016 and started out as a producer. So I bring a little bit different perspective to the underwriting role than like your average underwriter. I still carry my producer's license, and I like to write business and like to find win-win scenarios and work in those gray areas. And so when it came to a series or session on how to win more than just the quote, I was happy to do this. So in today's session, we will look at how to prepare a winning submission, how to complete a winning submission, and how to bind a winning submission. And those are three distinct things. So let's see here. We'll move on to first page here if I can get my PowerPoint to work. So, how to prepare a winning submission. So you somehow sometimes hear it's not how you start, it's how you finish. But in the insurance world, how you start a quote and how you start a submission is extremely important. And it could derail the entire thing and waste a lot of time if you don't start off on the right foot. So first, let's understand what Blitz is offering here. Blitz offers small commercial E&S. We have a significant number of producers that do not realize this, that think that we're an admitted market. And that's a huge compliment to us because we certainly like to offer that admitted feel. It feels like a direct appointment, but we are non-admitted, excess and surplus on A minus 15 excellent paper. So, we are, extremely well founded and established as far as an ENS carrier, but we are that ENS. We are not an admitted market. So we can't write everything that comes across your desk. We just want to write what doesn't fit with the admitted market. And then when it comes to what we're offering, as far as programs, contractors, LRO, builders risk, and so on, as you see there on the left side, if it's not falling within those, don't attempt to try and fit a square peg into a round hole. We're not going to take a $20 million builder's risk or a manufacturing general liability, something of those lines. So you want to make sure that you understand our appetite and have a good idea of what fits and what you can quote with us, and rather than putting something through and kind of spinning your wheels. Now, we don't have accord forms nor supplementals. Everything does go through our proprietary platform, but we do ask, obviously, some specific questions, and having an understanding of what we like, what we don't like, is going to really help you save time and have a higher success rate when you do have something that fits us. So you see some of the other things. We're looking at $5 million TIV per location, $3 million payroll, $15 million sales. Those are the maximums. Um, so we're not going to take on a $10 million strip mall or a contractor that has 6 million in payroll or 20 million in sales. Those things are not going to be options for us. Those are getting outside of the small commercial ENS space. So then you got to think about what type of risk do you have? What do they do? This seems very simple, but I see a number of accounts that come through, number of submissions, and they are not taking the time to really understand what they do, and this can greatly affect the rating and the coverage for the risk. So one example would be, what's the difference between a general contractor versus an artisan contractor? A general contractor, and this is, there's different definitions. Some people think, well, he does a little bit of everything, so that makes him a generalist. No, for insurance purposes, we would consider a GC someone that is subbing out everything. So one of our one of our top classes of business that we write are 100% paper GCs. So that's going to be the companies or businesses that sub out 100% of their work, and they use all insured subcontractors. And then you kind of get into your specific tradespeople, what we would call an artisan contractor. These are going to be your carpenters, your electricians, your landscapers, your pool contractors, your tree trimmers, things of that nature. We have 95 contractor class codes that we write. So then within that space, trying to figure out, well, do they perform the work or does an insured subcontractor? So if they don't perform any of the work and they're subbing all of that work out, then when you're in the system and it says, does the applicant do XYZ, fill in the blank, you're going to answer no if they're not performing that work. If they are performing that work, then answer yes. And then our system will appropriately apply the correct class codes that go with that type of work. And then another question that we get often is, well, what counts as like subcontractor payroll? So and really this is getting into whether they're insured subs or uninsured subs. So subcontractor payroll for Blitz is going to be your insured subs. If they are using uninsured subs, then that would be counted as employee payroll. So then we would rate for that payroll and rate for the type of work that they're performing. And then as you see, there's a note for understanding the contractor class codes. I think this is really important and is really what I'm here most, to answer questions. As a business production underwriter, when you have a specific risk, is getting to understand the details and the differences between each class code. So you may have a contractor that they go out and they install, let's say they do landscaping, they're putting in bushes and trees and things like that. But we'll see a lot of submissions where those are submitted as lawn care. Those are two different things. Lawn care is going to be where they're on a regular schedule to mow your yard, trim your bushes and trees and things like that, but they're not really doing a lot of planting and projects, one-off projects for a property. Whereas a landscaper is going to come in and it's going to be, hey, we're spending $10,000 on your property. We're going to beautify the outside. We're going to plant trees. We're going to do different things. That would be a landscaper. So that's just like one example of the difference. And you may have a contractor that does both of those, and you would rate for both of those. But you wouldn't want to rate somebody who just mows yards as a landscaper or somebody that does landscaping and never mows yards as lawn care. Another question or situation that I see often, and this seems kind of elementary, but the distinction between a lesser's risk only versus a tenant. What we are looking for in our LRO program is ensuring the building owner who does not occupy the space. That is the classic definition of an LRO. They just are the landlord. And then obviously the tenant is going to be the person or the business that is operating within the space. They are leasing from our insured. But believe it or not, this gets confused quite often. And then commercial condo units. This is something worth pointing out. We see these a lot in Florida, Texas, California, becoming extremely popular, where you have a commercial condo association with individual units that are owned and then tenants that are renting from the individual unit owners. These are not within our appetite. So I would want to make that very clear. But getting an understanding of what type of risk it is and what they do is extremely important in making sure that you're prepared for a winning submission. One tip I would like to make that we see this come back to hurt a lot of submissions is you especially see it in the contractors world is that, let's say that they're a startup landscaper, for instance, and they've got this website. They're trying to build their business. They've got Facebook, Instagram, everything, and they're making videos and posts and and images on their website and list of services that is nowhere near what they can or will do. So such as like snow plowing, crane work, all these different like crazy things, land clearing, and really they're just out there with a small excavator and shovels, and they're a two-man operation, and they can't do any of that work. They try to look bigger than they are, and that can harm them from an underwriting standpoint because they are going, they're advertising this work, even though they're not doing it and can't perform it, at least not yet, then most likely we're going to ask that, they be rated for those exposures. Excuse me. So, as we move on, how to complete a winning submission. So, this is getting into really the details of how to properly uh, create your submission. You know you've got something that fits. Now we're getting into the details. I come from a property underwriting background, and I have seen I mean, major mistakes and errors when rating for property. And we know in certain areas of the country, property rates can be quite different, based on the construction type, year built, square footage, things like that. So you really want to make sure that you're paying attention to all those details. We ask all these, the questions and the specifics of a property because they're rating factors and they're risk factors in determining eligibility. So as I note here, significant rating differences in construction types. One of the most common mistakes I see made is someone putting that they have a non-combustible building when it's actually masonry non-combustible. The difference there is non-combustible is going to be a metal building, and a masonry non-combustible building is going to be as it sounds, a masonry building, a block building with metal trusses and typically a flat roof. One is extremely wind resistant, more fire resistant, and then non-combustible is going to be typically light metal panels on the exterior, could be light metal panel roof, and it could be it could be pitched, a lot different wind risk, and a lot cheaper construction or less expensive construction, and thus you're going to get different valuations and different ratings based on that. So really make sure that you've got the correct construction type, and if you have a question, feel free to ask, call, ask your business production underwriter, which may be me or one of my colleagues, and we're happy to take a look. Personally, I'm a wizard when it comes to property assessor sites, and having looked at thousands of properties over my underwriting career, I can usually determine what type of construction it is with high accuracy. And then protective safeguards. I want to note this here. So these, it can seem real easy. Oh yeah, I'll just check, sprinkler and fire alarm and this and that. Definitely want to take note and make sure that those are accurate and that they are present and that they're working. So protective safeguards are, they may get you a slight credit on the rate, but what it's also adding in is a protective safeguards endorsement, which is going to require that whatever protective safeguards you've selected they're present, they're active, they're maintained. Basically, they have to be working all the time. And if they're ever down, we have to be alerted that they're no longer in service for that period of time. Because if there's a claim and they're not present, they're not active, they're not working, then you will see reduced payouts on claims and reduced coverage. And then one question we get often is about updates. What is an update? When it comes to electrical, plumbing, HVAC, roof. So for us, a roof update obviously is going to be a new roof. It's kind of really about the only way that you can update a roof is to just simply replace it. But when it comes to electrical, HVAC, plumbing, an electrical update where you're not looking for someone to completely rip out all of their electrical or to, rip out all of their plumbing. But it's mainly, hey, if someone has a 40-year-old building and they've upgraded from They've taken out the old panel, the old breaker panel, they put in a brand new one that's UL listed, then I would consider that an electrical update. If they've redone all of their connections to their sinks and to their toilets and things of that nature, those would be considered a plumbing update. HVAC is going to be a replacement in most cases, but we're not looking for, this building had to have gone under a complete gut renovation to have those updates. The next point I want to make here is on valuation. Valuation has been a huge topic across the industry for the last several years, and we certainly want to ensure that our buildings are properly valued. We are looking for replacement cost valuations. We do offer replacement cost with 80% co-insurance on our buildings that we insure. So, in an effort to maintain low rates and maintain, proper coverages, not have co-insurance penalties, things like that, we want to insure buildings for what they would cost to replace, or at least within, 80% of that number. So, in our system, we will give a range. Sometimes that range may be, to some a little far-fetched, but we don't necessarily think it's the holy grail of replacement cost estimates. If you have a CoreLogic replacement cost, a recent appraisal that has a replacement cost estimate in it, then, excuse me, then we can use that valuation and document the file and move forward. But, if we see that our range says a building is $1 million and you've got it for 300,000, that's probably not going to, pass the smell test. And we're going to, ask that that be increased or provide proof that the valuation is that low. And then one thing that will trip up many producers, and I've seen this derail many submissions, is answering yes to, does this building have stab lock breakers? So stab lock is right in the kind of the same mix as Federal Pacific panels and things of that nature. Stab lock breakers are a bad thing. They led to numerous fires in the 80s and early 90s, eventually leading to them being having their UL listing removed. Do not answer yes to stab lock breakers thinking that is a good thing. It's going to be an immediate decline on the property portion of the risk. So if you don't know, if they have stab lock breakers or not, then, ask the insured to provide a picture of the breaker panel. It's going to be very obvious if they have stab lock breakers or a Federal Pacific panel. And then you'll be able to answer that question confidently. So, moving on. So another issue that I see, and when it comes to efficiency and speed and quoting, is we will have producers get really caught up in the LRO submissions on tenant names. So they're like, oh, I don't have an SOV, I don't have a rent roll, I don't know, what the names are of these tenants. You can simply go into, Google Street View, or, there's a website or something where you can see the names, or see like a picture of it. And you don't have the LLC names, whatever. Just put tenant one, tenant two, tenant three. If you know that they're eligible, operations, then you'll just select the type of business that it is and move on. And don't get hung up on having to get every single name. And then once you get the bind order, then you can go back, get the names, put those in there, and you'll be good to go. The reason that we ask for the tenant information up front is to prevent issues on inspection. We, don't, the last thing that we want to do is inspect a property and then find out they've got 4 or 5 tenants that are ineligible, and then we have to send a cancellation. We get this information up front, and it prevents headaches on the back end. Another tip is business income. So whether it's LRO or in our retail and services platform, we will only do 55% of total annual rents and sales. So I've seen producers struggle and they email and they're like, well, I'm putting in the same amount for business income as I am for sales and it's not working. The tip here is 55% is the maximum that we will go to. So keep that in mind. Oop, let me go back here. So builder's risk. This is another one. This is a uh, program that is near and dear to my heart, and we do extremely well in this program. But some common referral reasons that we see in this program, where it's really just mistakes by the producers that really just slow down the process, is they'll put the construction start date before the effective date, or they will have no general contractor noted for when it's an owner only uh, risk, and they're asking for general liability. And then so there's a question in there. It's like, what type of insured is this? They'll select owner. And then there's another question that asks about, well, name the general contractor, and they don't put an answer there. That causes a referral. And then the last one is selecting general liability for a general contractor. And when there's no desire to have general liability, when it's a general contractor that owns or that will be the insured that owns the property. So they're looking really for property only. The general contractor already has liability, so they're not worried about that, but they're still selecting premises liability for a GC when it's not actually desired. And then I would say that this last slide here is about answering the obvious questions when it comes to anything that has some complexity, a little hair to it. It's in a gray area. It's going to be referred for loss history. It could be a builder's risk where they've already started. Maybe they're 15-20% into a project, which we will consider. um, then you want to answer those obvious questions that underwriting is going to have. You you anticipate it to be a referral, then go ahead and upload and provide those documents. Our system allows for it in the submission. It can be photos, loss runs, any other type of documents that are related to the risk. Sign no loss letters, copy of the current quote slash policy. Those things are going to be extremely important, and making sure that you get a quick and fast decision made on a referral. And this is an extremely important point to make here. Target premium is absolutely crucial in ensuring that we can put you in a winning position with Blitz. So we certainly keep our pulse or thumb on the pulse of the market when it comes to rates, but we write in 47 states, so we can't know exactly what's going on in every single state for every single product for dozens and dozens and dozens of lines of business that we write. So definitely, if you have one, please put in a target premium. Uh, Most of our programs allow at the end, you can put in a target premium, you can put in renewal information. These things are extremely helpful, even if it's not referred to underwriting. Someone like myself or one of my colleagues, when we're performing a quote follow up, we can see that information. We can see the quoted premium, see the target premium, and make a determination like, oh, okay, looks like we're right there, or it looks like we might need to uh, work on this rate a little bit. Let me give the producer a call and see how we can help. Um, so this is going to really help win business, and the producers that put in target premiums and reach out when we are, off of target, those are the ones I can confidently say are winning on a regular basis. And of course, this obviously, if we start to see patterns in, rates in certain areas, then we can certainly adjust our rates and where we can hit that target premium more regularly. So, as we get to the last portion of this session here, now we're talking about binding a winning submission and what does this look like. So, this is a screenshot of a little bit of an updated version of what our system is going to look like. But what it still kind of points to is that we give you the ability to tailor the quote to your insured's needs. So you're going to have options to toggle on and off coverages you can change deductibles, and thus you'll change the premium in real time. So when you're on that quote screen and the premium is in the upper right hand corner, you can see those things change and not have to go back into the application journey and redo everything. You don't have to go back 4 pages just to change a deductible or change a coverage. You can see it right in that quote screen, and you can generate multiple quote options and really dial in where you need to be from a coverage and deductible and rate standpoint. You also have uh, the option to contact your business production underwriter, and we can review and compare forms. So if there's certain forms that you need or don't need on a quote, then we can take a look at those. We can also adjust supplements such as for excuse me, for assault and battery, vandalism, theft, things of that nature. And then simply after you've done everything, you've got the quote as close as possible or right on to the limits of what you can do within your authority as a producer. And if you still need help, then call your business production underwriter. We have the authority to provide credit and premium relief, to adjust forms, to make changes to a quote, and basically take it to the finish line. I work with producers every day doing that. I enjoy it. It's a lot of fun. And we want more producers to realize that this is not a take it or leave it transaction or platform. You actually have somebody you can talk to and work with to get things across the finish line and get more binds across your desk. So, lastly, I'll leave you with this. When in doubt, reach out. Contact me, contact Roxanne Martinez, Jason Banis, who is over with some of our wholesale partners, or anybody else within the Blitz family, if you will. We are here to help. So we will get you over to your assigned person, and we will help you out, answer questions, do demos, whatever you need to be armed and ready to bind with Blitz. Really appreciate everybody's time this morning, and hope you have a very happy new year. Thank you.